to the stock exchange, it is necessary for a public company to get its shares listed or quoted on a stock exchange. So, before inviting the general public to issue shares, to subscribe for shares in securities, the public company needs to apply to any stock exchange for the enlistment of its shares in such stock exchange. If it does not get permission within 10 weeks, then the issue of shares will be termed as void, and all the application money received till date will have to be returned to the general public within 8 days. Next is allotment of shares. Allotment of shares means the acceptance of share applied. After getting name listed on stock exchange, the company makes allotment of share as per the SEBI guidelines. Successful allottees are given allotment letters. A letter of regret is issued to the applicants to whom no shares are allotted. The company returns the application money to the applicants to whom no share is allotted by the company. In case of partial allotment, when shares are allotted in less number than applied, excess application money is either returned or adjusted towards allotment money. The name, address of shareholders and number of shares allotted to each shareholder signed by every director or secretary is filled with the registrar of companies within 30 days of allotment in a statement called return of allotment. Next is important documents used in the formation of a company. Number 1, Memorandum of Association. Number 2, Article of Association. Number 3, Prospectus or statement in lieu of prospectus. Number 1, Memorandum of Association. Memorandum of Association is the most important or fundamental or the principal document of the company. A company cannot be registered without a Memorandum of Association, and therefore it is sometimes called the life-giving document. Memorandum of Association is the charter or the constitution of the company. The signatories to the Memorandum of Association state their intention to be associated with the company and give their undertaking to subscribe the shares mentioned against their names. The Memorandum of Association must be signed by at least 7 persons in case of a public company and by 2 persons in case of a private company. Anything done beyond what is stated in Memorandum will be treated as ultra vires or beyond the legal power of the authority of the company. Anything which is done what is not written in the Memorandum of a company will be treated as beyond the powers of the company and will not be legal. Now next is contents or clauses of Memorandum of Association. Following are the different clauses of Memorandum. In a Memorandum of Association, it is the charter of the company. It is written everything regarding the powers and activities of the company, the purpose of the company, for what the company is formed, what are the powers of a company, what activities is the company going to do, what business will the company be doing, what are the powers of the company. All such information is written in the memorandum, and anything which is done which is not written in the Memorandum of Association will be termed as ultra vires, that is beyond the power of the company, or it will be termed as illegal. Now let us see what are the clauses, what are the contents in the Memorandum of Association. Number 1, name clause. In this clause, the name of the company is stated. The company can select any name subject to the following restrictions. The proposed name should not be too identical or similar to the name of another existing company. The name should not be objectionable under the provisions of National Emblems Act. Next is the name should not be misleading to the public. The name should not use the word cooperative. The name should not convey any link with the government department or local authority. The name of the company should end with the word limited in case of public company or private limited in case of a private company. The name of the company is conspicuously or clearly printed or affixed on the outside of the premises wherein the business of the company is carried on. The name should be clearly written outside the office of the company. Next is registered office clause. The address of the registered office of the company must be written clearly in the Memorandum of Association. Next is the objects clause. It is the most important clause of Memorandum of Association. It defines the main purpose for which the company is established. The company is not legally entitled to do any business other than that specified in the objects clause. The objects clause is further divided into following main clauses: the main objects and other objects. The main objects contains the main objects for which the company is established. Any essential or incidental act which is needed to accomplish with the main objective is deemed to be valid, even if it is not explicitly stated in the subclause. Other objects. The subclause includes those objects which are not included in the main objects. However, if the company wishes to initiate or undertake a business included in this subclause, it has to either pass a special resolution or pass an ordinary resolution and obtain the approval of the central government. The main object are the objectives that the company has stated it wishes to fulfill or do. Also, it can be undertaking any other business which is mentioned in the other objectives of the company, other objects of the company. For this, the company needs to pass a special resolution or ordinary resolution in the general meeting of the company, and also needs the approval of central government before doing that. Next is liability clause. This clause defines the liability of its members of a company is limited to the amount unpaid on the shares held by them. If the share is valued at rupees 10 and each member has paid only rupees 6 till now, then the remaining rupees 4 is to be receivable from the members of the company. The company would be receiving that rupees 4 from each member of the company, and the members of the company are not liable for any amount in excess of that rupees 4 that is unpaid on the shares. So only rupees 4 will be payable by the members of the company, and their liability is limited only up to that. This is written clearly in the liability clause of the Memorandum of Association. Next is capital clause. This clause states the maximum capital which the company will be authorized to raise through issue of shares, that is called authorized capital. For example, authorized capital of the company may be 10 crore divided into 1 crore share of rupees 10 each. Next is article of association. The article of association contains the rules and regulations relating to the internal management of affairs of the company. The internal management of the company is guided through the article of association. The memorandum of association is the charter of the company. That means it defines what are the rules and regulations of the company, what are the objectives of the company, and what are the powers of the company, what is the main idea, what is the main objective of the company, what business it is going to do. But article of association is relating to the rules and regulations for the internal management of the company. Next is the contents of articles. Number 1, exclusion wholly or partly in part of table F. Number 2, adoption of preliminary contracts. Number 3, number and value of shares. Number 4, allotment of preference shares. Number 5, allotment of shares. Number 6, call on shares. Number 7, lien on shares. Number 8, transfer and transmission of shares. Number 9, nomination. Number 10, forfeiture of shares. 11, alteration of capital. 12, buyback. 13, share certificates. 14, dematerialization. 15, voting powers, voting rights and proxies. 16, conversion of shares into stock, incorporation of companies and matters incidental thereto. Number 17, meetings and rules regarding committees. Number 18, directors, their appointment and delegation of powers. 19, nominee directors. 20, issue of debenture and stock. 21, audit committee. 22, managing director, whole-time director, manager and secretary. 23, additional directors. 24, seal. 25, remuneration of directors. 26, general meetings. 27, directors meeting. 28, borrowing powers. 29, dividends and reserves. 30, accounts and audit. 31, winding up. 32, indemnity. And 33, capitalization of reserves. So these are the matters on which rules are being made in the article of association. Next is the difference between memorandum of association and article of association. On the basis of objective, aim or purpose, memorandum of association states the objective for which the company is established. However, article of association defines the rules and regulations for the internal management of the company. Number 2, memorandum of association is the principal or fundamental document of the company and is subordinate to the Companies Act. Article of association is the document subordinate to both memorandum of association and Companies Act. Relationship. Memorandum of association defines the relationship of the company with outsiders. Article of association defines the internal relationship between the company and its members. Next is validity or legal effect. Act performed beyond the scope of memorandum are void. Next is act done beyond the articles is ratified by the members by passing a special resolution, provided they do not violate the memorandum. Number 5, alteration in memorandum of association is very difficult and lengthy process. The statutory authority is required in many cases. Alteration of articles is very easy and simple process. Number 6, necessary or compulsion. The preparation of memorandum of association is mandatory. The article of association preparation is not mandatory or compulsory for a public company. It may adopt table F of the Companies Act. Number 3 is prospectus. Prospectus is a document inviting deposits or offers from the public for the subscription or purchase of shares and debentures of a company. As per section 2 subsection 70 of the Indian Companies Act 2013, prospectus means any document described or issued as prospectus and included any notice, circular, advertisement or any other document inviting offers from the public for the subscription or purchase of any securities or of a body corporate. The essential elements of a prospectus are: there must be an invitation to the public. The invitation must be made by or on behalf of the company. The invitation must be to subscribe or purchase its shares and debentures to make a deposit. Main clauses or contents of a prospectus. The common contents of a prospectus are: company's name and address and its registered office, nature of the business of the company, main objectives of the company, name, address and occupation of the signatories to the Memorandum of Association and the number of shares subscribed by each of them, the number of classes of shares and the rights and privileges attached to each of the shares, name, address and occupation, qualification of shares and any remuneration of the directors, contents of article of association, the amount of minimum subscription, the time of the opening and closing of this subscription list, details regarding debentures if any, amount payable on application, allotment and calls, the amount of preliminary expenses, name of the underwriter to the issue, name of the merchant bankers to the issue, in case of a running business has been taken over, name and address of the vendor, details of the property purchased, amount of purchase consideration, etc., name and address of the company promoters and the consideration to be paid for them for the flotation of the company, inspection of profit and loss account and balance sheet. So such information must be provided in case of the prospectus. And at last we have statement in lieu of prospectus. A public company having share capital may sometimes decide not to approach the general public for securing necessary capital because it may be confident of obtaining the required capital from the private sources. In such cases, it has to file a statement in lieu of prospectus. Statement in lieu of prospectus can be filed by a public company when it is confident of raising funds from private sources and not inviting money from the general public. So this also acts as a prospectus. The next is choice of a suitable form of business organization, significance and factors. This we'll see in the next video. However, this is also excluded from the syllabus for the year 2020-21. We'll just have a look on this on the next video. Till then, thank you very much and bye.